Hi, welcome to Breadonomics. In this video, I'm going to break down question 13 from the QCE Economics 2024 external exam. This was the third of the 4 short response questions. It's getting a bit juicy now. We're up to 11 marks. So the question starts with hypothetical annual data for an economy similar to Australia's economy is shown. We can see there 6 data sets, 6 pieces of information. Down the bottom of the question, it said, analyse the data to decide whether its central bank should continue its current monetary policy stance. You had 28 lines in the response book, so you may be writing up to about 200 words on this question. This question is an analyse to decide. So decide, we're going to have to evaluate along the way. And really the main thing is, should the central bank of this fictitious economy continue its monetary policy stance? To answer this question, we're going to do it in 3 parts. The first one is to determine the current state of monetary policy. The second part is to analyse the data. And the third part is to make the decision. So step 1 is to use the economic information present to determine the current stance of monetary policy. And from this, we'll start to make some inferences to determine how the economy is functioning. The first data set tells you that the cash rate is 8% and rising. So the current stance of monetary policy, we're seeing a contraction or a contractionary tightening of monetary policy. From that, we can make an inference, and this video is going to talk a lot about inferences. This suggests that the economy is likely in an expansionary phase. The fact that cash rate is rising rising over consecutive months or quarters suggests that they're trying to put the brakes on the economy through manipulating monetary policy, cash supply. If we think about previous questions in exams, that we could be like at point A in terms of our business cycle, okay, well above trends. The question that's asked for you, and you have to think about throughout this video, is should the central bank continue this monetary policy stance? In step 2, we start to analyse all the data available to understand the economy. And a bit of a pattern that I work to is my first step is I want to think about what's going on, identify my trends, patterns, changes, similarities, differences. Okay, I want to make sure that I quantify and calculate data where possible. Use the data to explain what I see. Think about, can I use basis point changes, percentage changes, range? Start to think in the back of my mind, what might be the likely cause of these events that are happening? My third step then is to start to think about making meaning and making inferences. Why is it happening? What's the effect? What's the economic theory that underpins some of the data that I'm looking at? And then link it back to the question. Think about how I can use my understanding of the data to think about this question, which in this case is, should the central bank continue with its monetary policy stance? Let's now look at the first 2 pieces of data that are highlighted there in yellow. It might be nice and easy to do these ones first. Housing prices rising by 10% per annum. Health costs are rising by 12% since last year. We're seeing at this point significant inflationary pressure. From that, we can start to once again make inferences. And I reckon that housing price level increases likely demand inflation. Okay, it's not like we have a restriction in the supply of houses, that's fairly fixed. So really, if we're seeing prices rise in the housing market, it's probably a demand side event. The health cost insurance is likely a supply, like a cost push inflation. The cost of providing health insurance rises, and so that cost is passed on to the consumer, to the households. Some economic thinking for you. I'm going to put one of these on each of the slides. Is the cash rate's probably more successful at influencing demand side inflation rather than sort of that cost push inflation, and that's because adjustments to the cash rate directly influence the amount of money that households have available for consumption, for spending, or for saving. Okay, cash rate won't necessarily lower the cost, or changes the cash rate won't necessarily lower the cost to the business as successfully as it will influence whether or not we choose to buy something. Let's look at the labour underutilisation rate. It's 4% and falling. So once again, underutilisation, unemployment, underemployment, 4% and falling. We know if you've done some work around the the NAIRU that that's getting to be a pretty low rate of unemployment for modern economies. Once again, this would lead to inflationary pressure. Falling labour underutilisation means that aggregate household incomes are increasing. Probably going to see some increased consumption. Okay, we're seeing more people working. We're going to see increased consumption. That's going to have a benefit or an effect on AD, on aggregate demand. An increase in any component of aggregate demand will create an increase in the price level if aggregate supply remains unchanged. So here we see that this low labour underutilisation rate and falling is potentially leading to greater consumption, which would then show up as a component of aggregate demand, leading to some of the price level increases that we're seeing in the economy. So we have now three sources that are all suggesting that the economy is really in an expansionary phase, and more so that we are seeing some price pressure appear in the economy. This is probably the trickiest one to get your head around. This exchange rate with a major trading partner has appreciated. AUD has gone from 80 cents to AUD $1. So even though it doesn't say it's Australian economy, we've got to sort of say there's an appreciation here of the dollar. As the dollar appreciates, exports increase in price. There's going to be no effect on domestic inflation at this point, but it will impact export trade. Exporters, once there's less export trade, they're going to start to try and maintain some trade volumes, potentially by reducing prices. Imports also will decrease in price. Imports decreasing in price is actually going to be a deflationary effect on domestic prices. Once again, think about your components of aggregate demand as you work through these data sets. Would that lead to increased consumption? We're likely seeing here in the net export position that X is contractionary and M, imports increasing, is actually a leakage from the economy. And that will also have a contractionary effect on the economy. So just overall, an increase in the currency exchange rate will at some level create an automatic stabilizer. It's going to have a deflationary effect on price levels and a contraction in domestic economic activity. And if you might have remembered that from Unit 3, where you did a lot of work in currency and that idea of the floating exchange rate as an automatic stabilizer. But what we're seeing now is some data that suggests that there are some contractionary pressures in the economy. Not everything is expansionary or inflationary pressure. And finally, our final data set to look at here, petrol and gas prices, 1% increase over the past year. This increase in prices is quite low. So there's really not any real price pressure in the economy from petrol and gas, and this could suggest evidence of a contractionary economy. We could also think back to like our targets. Does this level of a price increase seem to be above or below a target for an economy similar to Australia's economy? I know that in Australia we talk about the target rate for inflation being 2 to 3% over the medium term, so this is sitting well below. We've also got to think about petrol and gas, for instance, being very major inputs into production, very significant inputs. And so no change in cost there will actually, in some industries, will create a situation where those industries aren't having the inflationary or the cost push inflation that other industries might be experiencing. Our final step in this question is to make a decision. And in making a decision, we have to use our tools of evaluation. Think about the for and against arguments. For the question that was put to you originally is, should the central bank continue the monetary policy stance? And we see that the monetary policy stance is increasing the cash rate to exert contractionary effects on the economy. And in looking at the data, we've identified that some elements seem to be contractionary, some seem to be expansionary. Let's once again just review them. Those inflationary or the expansionary indicators, house prices, health cost, and the strength in the labour market. The deflationary or the contractionary indicators, export prices, import prices, petrol and gas prices. So now we have to think about how we can balance those to come up with a decision of should they continue the monetary policy stance. In writing this decision, start by stating your position at the beginning of that paragraph. Be very clear and justify then why you've taken that position with balanced reasoning, drawing on the arguments for and against why you've chosen that particular stance on monetary policy. Also includes some discussion on the limitations of the information provided in making your decision. So for instance, you might even do it simply saying, look, this decision is based on ceteris paribus, that we know nothing else about the state of the economy. Or you could actually go and say, look, the caveat that I place here is that there is very limited information about the economy to make a big decision on something like cash rate. Now let's review the marking for this question. We see that expansionary, we identify that inflation pressures exist. We interpret labour force, health costs, and housing cost on that inflationary and that expansionary side. We also then identify that there are some offsetting contractionary forces, petrol prices, AUD on exports, AUD effect on imports. We've made the decision and we provided some reasoning. And finally, always think about, whenever you evaluate, make a decision, think about providing a caveat. That wraps up this short video on question 13 of the 2024 EA. Remember, when you analyze, first of all, identify your trends, patterns, similarities, differences, quantify and calculate your data. And finally, make inferences, make meaning from the information provided. When you come to your evaluation, and your decisions, ensure that you think of both sides of the argument, the for and against, the pros and the cons. Just covering off those steps will definitely shift your results up on the marking guide. All the best with your studies, and come back for more videos to help you through your economics external exam. Thanks, everyone.